Welcome to TheoTrade. This is Don Kaufman. Here we are. It's May 22nd, 2017. Just a few minutes to go to the cash close in today's markets. Well, on tonight's Theo video, we're going to start off with a little fun exercise here in behavioral finance. And that happens to be, well, first and foremost, I have covered up the symbol. Okay, you're looking at an unknown product of unknown proportion over here and unknown highs or lows. But I wanted to just give you a little bit of perspective on markets as of late and how extreme they've really been. So for that, we're actually looking at a chart here, again, unknown symbol. And you have to ask yourself right now, and again, not knowing the range of this product over here obviously puts you in a tough position, but just looking at this chart, would you want to go out and would you want to buy whatever stock this is, seeing a fairly wild downtrend, or would you rather be a seller? Okay, and it's a fair question because at a point in time like this, when markets are hitting degrees of extremes to the upside, okay, I like to actually proposition it from a very different perspective. Number one, would you want to go long here? Being long at a product like this that's absolutely imploding is no easy task, right? You got to go out, you got to be the ultimate contrarian over here. You got to want to own this stock. You got to love it. Obviously, it's in a fairly wild decline over here. But on the flip side, I look at this and I think to myself, would I want to short into this disaster? Do I think that this disaster could get substantially worse out there? Now, it's, again, fair question to see, like, are you a contrarian? Again, a contrarian would, of course, want to be long this product, all right? Then we have our trend followers, which ultimately want to be short this product. So kind of a fun place to start in tonight's video over here. Think about what you'd want to be. Myself, I am ever the contrarian, and I look at this and I think, wow, there's some fairly great opportunity. Now, let's reveal what symbol it is. Number one, not any symbol you're familiar with, it's the Nasdaq, but I inverted the Nasdaq, okay? So what this symbol really happens to be is the NDX. Once again, it's the Nasdaq, except, again, I inverted it by putting a minus sign in front of it. And yeah, look familiar over here? You have to kind of question things once in a while when you see explosive moves like this from last Wednesday to ultimately right now. We haven't completely filled up the gap over there, but pretty good given the fact that, again, the open from Tuesday to ultimately where this candle currently resides, pretty much done. That gap is all but closed over there. Again, the rally back on Thursday, Friday, and of course today has been substantial. However, this is very, very specific into the Nasdaq. The rest of the marketplace, and again, we literally have 9 seconds left in the trading day. The rest of the marketplace has rallied back. But today's trading session, things are not necessarily what they seem. And I want to bring you again into a little bit of that perspective. When I say something is not necessarily what it seems. So we've rallied back again substantially since our little, like, I guess we'll call it, again, flash in the pan or a little snafu that happened last Wednesday. Again, Thursday, Friday, and of course Monday we rally back. However, what products really rally back? And it's extremely Nasdaq specific over here. Again, that's why I started with this like little idea, like in behavioral finance, would you rather be long or be short in that product that looked like it was tanking? Well, it actually describes why, I look at the Nasdaq right now and I want to be short the Nasdaq. I'm ever the contrarian, and seeing this rally back over here, just that continues to kind of resonate with me, that I want to be short in a marketplace that's exploding higher over here. Now, what's really changed? As I said, something has actually changed in markets in really today's trading session, and I saw it in Friday as well. And that's, look at some of the other products, okay, that often drive markets and drive market direction. One of them being, of course, the XLF. So I look at the financials a tremendous amount. And I ask you, did the financials really rally back, okay, from the 23 level to right now? Well, yes, but they're closing here at 23.40. The damage that was ultimately done on Wednesday still resonates fairly large inside of the financial products over here. I mean, today we closed, the S&Ps just closed up 11, the Nasdaq on fire. You start to realize that this rally back that we're seeing, okay, once again, we're whittled down now to 2 or maybe 3 massive market cap stocks that are actually driving order flow, not only into the Nasdaq, but it reverberates back into the S&P 500 as well. Okay, is that the sign of a healthy marketplace? Like looking at that and deciding like, oh, the sign of a healthy marketplace. Oh yeah, that's okay. I'm not saying the markets can't continue with this upward momentum, but each and every day you're starting to look at this, there are less positive signs on the screen over here. And again, I point this out. So obviously, if you look at the XLF, there's a big bounce back, obviously, on Thursday. You know, here it is again on what? On Friday, but we closed off the highs of the day. Today, very, very similarly, we bounced all the way almost to 23.50, faded off it. So there's the XLF. Another major sector that we look at a tremendous amount happens to be none other than the energy sector. And clearly the energy sector has been under some stress lately. But again, the energy sector similarly gets whacked back, has a nice bounce, fades off of it. But I can't tell you, but maybe on one hand, can I count the number of times where I've actually seen the XLF relatively unchanged on a trading day, the energy sector down, albeit minimally on the trading session, yet the S&P futures up 11. And again, all we're seeing right now is a rotation of capital. And what is it? It's out of everywhere and ultimately into, well, let's do again. This is days of what's working. Let's buy some Apple, okay? Ultimately, let's buy some Google out there. Let's buy some Amazon, and it's a party. And that is predominantly what's driving markets. Interestingly enough, even Microsoft, being one of the largest market caps, played a role inside of today's rally. But you can't point out any other key areas that have massive market capitalization that have been incredibly strong. So here we sit with a marketplace that looks incredibly fragile, but it's difficult to describe to anybody how fragile markets happen to be because everybody's infatuated with, hey, we're a stone's throw off all-time highs, Don. I don't want to hear it. Or, hey, go take a look at the Nasdaq, which once again is what? A few points off of its all-time high, rallying back from what was a fairly scary decline of about 130 Nasdaq points less than a week ago over here. So all right, you just really have to keep perspective on a day-to-day basis. Yes, the markets are definitively grinding higher on less and less health in the overall market. So we're seeing like degradation in the marketplace. You know, on top of this, throughout the course of the trading session, I was looking at things like advanced decline line. The advanced decline line is 70-30, right? And for those of you that don't necessarily look at the advanced decline line on a day-to-day basis inside of the S&P 100, okay, this is not great. Everywhere we look, we see signs of degrees of weakness. Yet looking back over to, again, the S&Ps when they're up 11, it's kind of hard to describe. Hence why I started with a little bit of psychology in the marketplace over there. Nobody, right, necessarily wants to jump out and buy that stock that's tanking. But yet when you look at stocks, and I'll take you back again to that original chart and leave you with this thought over here. So all I did, by the way, to pull that up was put in -NDX to kind of tie this all together of why I displayed this. You know, you look at a stock like this and you think to yourself, oh, wow, man, this thing is just getting absolutely pummeled. A good traders always find opportunity because when things are getting absolutely pummeled, that's prototypically when the market turns around. And on the flip side, when you're looking at a marketplace and you recognize that this absolutely is the same opportunity, but now it's just similarly to the downside. Thanks everybody again for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.